Welcome to Portfolio Playbook. I'm your host, Damanick Dantes, founder and portfolio manager at Dantes Outlook. Today, we'll explore market strategies and some of the people shaping global investments. Today, we have a special episode on the lead up to our Dubai series. The CMT Association is having an event coming up in later this month. So I'll talk to you about that. And then also joining me is Yara Fanek. She is a CFA and CMT charter holder and the co-chair of the Women in Technical Analysis. Yara is based in Dubai and she's bringing deep expertise in financial markets and investment banking. She's highly skilled in both fundamental and technical analysis and has a special results-driven approach that blends trading, leadership, and also stakeholder engagement. In this conversation, we'll hear about Yara's background, her trading process, and lastly, her outlook for the region at a pivotal moment for global markets. This episode also sets the stage for two important upcoming events from the CMT Association. On September 28th, the CMT Riyadh Community Meeting, a premier gathering of charter holders, candidates, and financial professionals across Saudi Arabia and beyond, will gather, and it'll feature top strategists and market technicians from the US, the Kingdom, delivering insights on technical analysis, macro trends, and how to navigate today's complex markets. And right after that, on September 30th to October 2nd, a packed day, the CMT Global Investment Summit will take place in Dubai, and it's an elite gathering that brings together fund managers, strategists, and leading investors with the regime shift shaping the future of public markets. So definitely feel free to join us. Both events are more than just networking. They're about elevating the investment practice, building your professional network, and mastering some of the tools needed for data-driven investment processes. So with that said, let's dive into today's conversation. Yara, thank you so much for joining me. How's everything in Dubai?
Hey, Damanick, thank you so much for having me. I'm super excited to be with you today, and thank you for the opportunity. Dubai, the ever sunny Dubai. Yeah, everything is perfect here, and we're also building momentum towards the CMT Summit. So things are coming together beautifully, especially on the Women in Technical Analysis front. We're also hosting a dinner on the 30th night. So we're sending out invites, reaching out to women to join us. We can have like a casual evening where we can chat, build some rapport and have some personal relationships ahead of the serious stuff when the summit kicks off.
Amazing. I saw the posting about the dinner. It looks fantastic. And I'm definitely looking forward to meeting you and the rest of our CMT family in Dubai. So let's Yes. So let's get started and just hear more about your background. What drew you to technical analysis?
Yeah, so for me, I've been I'm a double charter holder. I've done CFA before CMT, so I've had the fundamental discipline sort of cemented, and then I was drawn into the FX trading world, and this is where technical analysis comes in and fits in perfectly because FX. What I find fascinating about FX is that it's practically probably the undisputed giant of financial markets. We're talking about $7.5 trillion in volume, or I think recent studies show that maybe $9.5 billion volume in daily volume, which is enormous. And I find it intriguing because it touches everyone. You don't have to necessarily be in markets to be impacted by FX. It can be any company that's buying goods from abroad. Maybe someone's booking their holiday and they want to exchange currency so they can travel, or I'm sending money to a friend abroad. That's FX coming into play. So in a way, it's like the backbone for global finance and global trade. And I feel that understanding FX helps not only in spotting international opportunities if someone wants to explore markets outside their jurisdiction, but it's also good because it sort of helps people make sense of what's happening in the economy. It's a reflection of everything that goes on every day, and we see it condensed in a number on a screen, which is the FX rate. So for me, that was the biggest thing that drew me into FX markets.
Hmm. Yeah, we have a similar background. I started out with FX as well at Saxo Bank, and I was covering Asian
Okay.
markets. Yeah, so straight out of school. And talk to me a little bit about the drivers that you noticed early on in your career that impacts markets, central bank policies, interest rate differentials. How did that get you started with understanding the inner workings of the markets?
Yeah, absolutely. And I think to your point, when you start in FX or when you explore FX, it's because it's 24/5. So you've got continuous sessions. You start with Sydney, which can be like maybe a bit of low liquidity, and you can do like explore range trading. Then you go to Asia. Most of the stuff there can be like Tokyo-driven, yen-driven events. We go eventually to London Open, that you have massive spikes there, big volume, and then excellent liquidity if you want to trade. And then it takes you all the way to New York. It happens to open in parallel with the global markets as well. So you get the interplay if you want to do asset classes. So that kind of continuous nature, for me, I find that it provides a lot of opportunities, but a lot of challenges as well. So to your question, I guess one of the things is because you're not really sitting in to listen to earnings call. You're not going to try to dig into financial statements. The forces that move the markets are basically, like you said, central bank policies. We've seen how the Bank of Japan intervened in 2004 and that impacted yen. I think between 4 and 5% move after that intervention. We see how economic data, NFP last Friday, sent the markets, with an immediate effect. Basically, it could blow off through stops really quickly unless your system is equipped to deal with these kinds of spikes that relate to releases. It's also, I think, for me, geopolitics, they come into play as well, because whenever there's tension, Middle East unfortunately is an area where there's a lot of tension, and that reflects on the markets. We also have another factor, which is the trader sentiment.
Mm.
So what traders think is going to happen to euros, what traders think is going to happen to this or that currency, and that gets amplified now that we see a lot of electronic or systematic trading. So whatever some traders are doing, you're doing it at a scale that can impact supply and demand and eventually impact the price that we trade at.
Nice. And then in terms of the volatility, right, that picks up leading into the New York session, what sort of drew you to developing more of a systematic process to navigate these markets?
Yeah, because I think I'm more of a like uh, a systematic person because I want to try to understand something, and when I understand it, I'm able to maybe talk about it or build something to make it work for me.
Mhm.
So whenever there's volatility, it's very uh, attractive because you can see the spikes and you can build your system to either uh, pause the trading during the spikes so it doesn't blow off your stops or your limits, or you can try and study where do I place my stop so it doesn't get wiped off very quickly if something like this happens. So it opens the way to think of possibilities, like how can I approach this one to make it work for me without jeopardizing a position that I wanted to keep, but because of a news event or an economic release event, now it's gone. Like you've gone out of that trade and you lost it. So it does help because it gives you a lot of data points to work with and a lot of data to look at and analyze and maybe study, identify patterns or experiment with different strategies. So it's a very generous market in terms of data points.
Nice. And I know that each region has their own behavior, right? Like Asia markets are a little bit more different when you look at price patterns and in versus US, right?
Yeah, absolutely. I think it's different, and the best thing is when you try to overlap with sessions. So you get the ultimate liquidity, and you get so many players coming in to play. And this is what makes, I think, Dubai a bit special because the time zone is very um, encouraging. You're right at the close of Asia and London Open. So you get full 8 hours of liquidity, which you can cover APAC and EMEA region.
Nice, nice. And then moving
Yeah.
from that theory and how you're developing, or you had the inspiration to be more systematic to now practice, I see that you're
Yeah.
building algos and rules-based systems. So walk us through some of the, how you approach that and dealing with the 24/5 nature of the FX markets.
Yeah, absolutely. I think, like you said, because the size is enormous, and because the size of the FX market comes great opportunities, but it also comes with great volatility and risk. And this is where technical analysis, I think, sits perfectly well in FX. Like it thrives in FX because it's pure price action, right? The beauty of it that draws technicians is that it's only the price action, the price you see on the screen, and the order flow. But to your point, the transition between theory and reality is always difficult because we can study some indicator, but when you go and you apply it in real life, it's a total different thing. The way you enter into a position might not be the same parameter that you're using to exit. So these things come into play. And for FX, the 24/5 nature, let's say you want to experiment with session-based strategies. You want to say, okay, during Asia session, I'll do maybe scalping. I can do 10 basis point targets and just try to do ride that smaller waves between the ranges. For London Open, I've seen some people try to do to capture the spike at the London Open. Maybe sometimes it's a like 50 basis point move in Euro GBP, and that can be captured in the systems and can provide P&L if someone's doing day trading as well. For overnight risk, because it doesn't close, like it's ongoing even after we decide like, okay, my day's done, but the market isn't done yet. So the trading keeps happening. For overnight, there's things like you can build a system to do an auto hedge if you have massive flows, or you can do protection for weekend gaps, especially if you're trading markets that closes like USD INR. It tends to either gap up or gap down sometimes, and you want to protect yourself. You can either go flat before you go into overnight, or you can have a hedger in place where you automatically exit your risk if you keep on receiving that. For FX, I think another big thing with building systems is the data. The data is there, but the broker feeds differ. So if I build my system and I use a data feed from a certain provider, that system will give me certain results. If I use a different data provider, these results can vary, and it can move my system from a profitable one to a really, messy one that doesn't really work. So there are some specific characteristics that make FX very special, very unique, but at the same time, way more challenging than if you're trading a different asset class. Two more things, I think. We have latency. Like you can't afford to have a lot of latency in FX because it's all pips that you're trying to capture. So and you see a lot of people trying to build their, co-locating servers to try and minimize that latency and make sure that when I want to execute, there isn't a lot of slippage and there isn't a lot of time that I'm missing between clicking a trade and it actually executing. The last thing that I've seen is the backtesting, which is the thing that we all love and hate, I think, because we love it when it works, but we get devastated. At least me, I get like frustrated when you do the backtest and then the results aren't as great as you wanted them to be. So there's a temptation to go and try to fit your data to make the results look good, or to say, okay, I'm being like honest enough. I'm just gonna scrap the whole thing and try again. Because in FX, you've got different pairs with different spreads, right? So the system should be able to understand that euro dollar is different than USD INR. The structure is different, the market is different, the spread is different. So it can't treat every currency pair the same. It also, you've got a lot of slippage, especially when there isn't a lot of liquidity, and a price that I wanted to exit at or I wanted to trade at might not be the ending price or the landing price that I eventually get. Also, the shifts between liquidity, because you might have Asian currencies being on holiday while the rest of the world is open, or maybe Middle Eastern
Very true.
currencies are on holiday, the rest of the world is open. So that also adds a little bit more difficulty when you're building a system that needs to be able to adapt to different sessions, different liquidity structures, and different natures for each currency pair.
Yeah. Wow, very complex.
Yeah.
But I can imagine, those are such important considerations, right? Because everybody, and I think it's what TA in general, or anything quantitative, there is this misconception of sort of magic, right? It's like you just put it in and you rely on it and it's going to give you fantastic results. But you're trying to overfit an imperfect reality, right? Like there's a
Yeah,
lot of
exactly.
consideration. I always say, like, some people, they come in and they say, I heard of this indicator and it works really well and I'm going to test it and it
Yeah.
fails. And what I've learned is that it's not just the one indicator. That indicator is built for a specific market condition. It's a combination
Yes.
of the indicators that create a system. And then once you have that system can be used just for the execution, right? Reducing the slippage or whatever, or idea generation. But what we've learned too at Dante's Outlook is, um, the indicator itself or the system itself, there is also that discretionary element, right? Where you
Yeah.
have some sort of intuition of the exact market conditions, and that's where it's more adaptable. Where have you seen the crossover from discretion to systematic, and how have you blended those approaches?
Yeah, I think at some point you're even if you're fully systematic, is going to have that human presence still there, because an algo can execute, or a system can execute, but it based on what it's learned or based on what it sees.
Mm-hmm.
But there's also the human judgment, right? Like you have your own, because the system can read data, but it can't read sentiment. It can't read maybe the context of what's happening outside of the data. A
Yeah.
human being can, and this is why I think most systems are equipped to uh, not be fully systematic, which is the ideal approach, but to have the capability for a human to step in and to try to take control if they need to.
Yeah.
Because what if I built a system and it's working and something happens, like an LP is providing a wrong rate, or they're
Yep.
publishing
Yep.
the rate, and my system is not going to recognize it, right? It's going to say, "Wow, perfect price," and it's going to keep executing. But it's up to me now as a human to say, "Okay, this is wrong." I need
Yeah.
to tell them, because they need to fix their price, and it's not fair for me to take advantage of a price that I know is wrong, to make P&L while someone else is going to be penalized for it.
Mm-hmm.
So a system wouldn't be able to know, right? Because they can't, speak to the market maker. They can't approach them. They can't have that kind of connection. But a human being can, and
Yeah.
this is where we have to have both. A system is good because it takes out my bias, and are all biased towards what we wanna see, because we wanna make P&L, right? I want all my trades to be uh, profit makers. But that's not going to happen, because at some point they're not going to be. And the system can help me remove my emotions and remove my maybe miscalculations, misconceptions of whatever it is. But my belief is that it has to have a human to oversee, for them to step in if they need to, and B, it touches on the ethical side of systematic trading as well, because the code is not a moral code, it's just a mathematical code. But
Mm.
it's up to us to infuse that moral aspect or moral dimension into our systems.
Well said, well said. And at the end of the day, the markets are human, right? This is, I mean, as much as you
Exactly.
see the flashing screens and you think it's all mechanical, it's generated by us, right? And we have our own
Exactly.
bias, and that's what generates the sentiment, right?
Exactly. And there's another person on the other side of
Yes.
the system that, yeah, exactly.
Got it, got it. And then, taking a little bit step back in terms of your origin, right? You told me the interesting story of early mistakes, right? And then
Yeah.
also, going to the conference and seeing the other CMT charter holders. Walk me through that
Yeah.
beginning stage and as a source of inspiration for others.
Yeah, yeah, absolutely. For me, like when you start, you make silly mistakes, right? You make the basic mistakes of having a position open when there's an economic release that's about to come out. I think it was CPI for me, and I had open positions. I was new on the desk, and I didn't know anything about anything except that I'm working there. So in the early year, I had open positions, and CPI was about to be released, and the price when it moves, right? And you can't recover from that. So it's one of these things where when you make a mistake, you're okay uh, to try to recover as much as you can and to try to learn from it. So next time around it comes in, it's advisable that you don't make the same mistakes again.
Mm-hmm.
It probably make a new one and learn from it, but try to avoid making the same. For the CMT summit, it was for me it was amazing because I went in there, I registered and went. I was only level 2, and I went in there. I didn't know anyone except that there's a CMT summit in Dubai, and I happened to be in Dubai, so I registered to go. And it's like being in a magical world because you've got all these heroes in one room sitting there to listen to, let's say, John Bollinger explaining Bollinger Bands is like, oh, this is like amazing. And you wouldn't be able to explain it to someone else other than the technicians who are sitting with you in that room. Because if I tell my friends, they'll go like, yeah, okay, so. But if you tell someone else who knows, like, who uses these indicators and they're able to hear firsthand from the creator of that indicator himself, like, this is like a dream come true. So I would encourage every person, if you have the opportunity to come to the summit, even if you're not into the CMT program yet, do register and do turn up because these are one of the best minds in the industry. They're willing to share so generously the knowledge that they have, the experience that they had, and they've put in a lot into this discipline, right? And we're just picking up from everything that they built and trying to put in a little bit of contribution, at least from my side, because I'm a bit late to the CMT party to contribute a bit towards that discipline and to promote it.
Yeah, and it's such a
So
close network. I think, over the years, I've seen more of the fusion, right? You're seeing more people adapt to the fundamental macro because those are important drivers that are growing. I mean, we're an ever more complex world, right? So it makes sense. And I think you just have to have an open, sort of quantitative mindset, and the
absolutely.
opportunities are limitless, right? At these conferences. It'll be my first time in the region, so I'm very happy to
Okay.
see Saudi Arabia and Dubai. So
Yeah.
talk to me a little bit about how Dubai emerged as a global financial center and why it's so important to have this event there.
Yeah, absolutely. Dubai is a growing city, right? It has so much ambition, and the UAE as a whole, but Dubai specifically as well. They have these. They're intentional into where they want to be. They're intentional in achieving the goal, and they're determined to achieve the goal. I think their plan is by 2023 to make Dubai among the top 4 financial hubs globally. So
Wow.
they are targeting that, and they are working very uh, confidently towards achieving that goal. For example, the IFC, which is the Dubai International Financial Center, is now home for 70 plus brokers. And in the half year 2025, I think they've added more than 1,000 firms, with a total now 7.7 firms operating in the IFC. So you've got private banks, you have broker firms, you have family offices, you have investment banks, rep offices of every uh, company or bank or establishment that you would find globally, choosing Dubai to be their home and choosing the IFC to be the place where they want to establish a presence. It's also the regulators or the regulations are keeping pace as well. So you have the FSA or ADGM, they are continuously evolving and improving the regulations to keep up with the massive speed at which Dubai is growing and to protect investors and traders, to make Dubai the place where investors want to come to invest, and where traders can feel that, okay, I want to put my money in here and I want to explore opportunities. So infrastructure as well. Like you've got the best of infrastructure, the best of uh, systems, the best of IT, and it's open to ideas, it's open to growth, and it evolves every day. Like every day you go, and then it's another step forward, and then the day after another step forward. So it's a home for a lot of people who come from different parts of the world. I think we've got maybe 190 or 195 nationalities living in Dubai. So you have people. I'm from Jordan. I work with people from all over the world. You go to the mall, everyone's there, and they live together. They work. They're building their own dreams, and in a way, building Dubai through building their own lives as well.
Nice, nice. Sounds like the New York of the region, a melting pot, right?
It is, and it's growing very fast. And what I like about it is that it has this open mind and welcoming attitude.
Hmm.
Like anyone who wants to come and present, anyone who wants to come with an idea, they have a place and they have someone to present their idea, their thoughts, their leadership, maybe their even innovation
Mhm.
to in this place. And there's a nice attitude where people receive you with open arms and they open up doors. They raise opportunities.
Great, great. And how have you
Yeah.
seen, with that intentional growth comes the requirement for inclusion, right? Making sure that everyone participates. And that kind of which got you to the Women in TA. So
Yes.
talk to me about that and the new opportunity as co-chair of the Women in Technical Analysis Committee.
Yeah. So I think for me personally, I do feel the privilege of serving in this committee because I can see that women are probably not as represented as they should be in professional societies or in financial markets,
Mhm.
because the percentage of women in leadership positions probably is far less than men. And the purpose of the committee is to reach out to women, to encourage them uh, to celebrate their successes, to celebrate their accomplishment, and also to encourage more women to get involved in financial markets. Some people have the perception that it's super demanding and it's a career that's a bit more stressful. Maybe you need longer hours, and all of that is true. But I want to remove that option where a woman has to choose either to build a great career in financial markets or to stay away or to sit it out. I
Mhm.
want them to be able to see that, okay, you can do both. And to present examples of people who are trying to do this or have already succeeded in doing this, to draw more people in and to have that technical analysis become something that's very close to people, that captures people's curiosity. So they come in and they try to get more involved or know more, maybe study more, and start to contribute on their own as well.
Yeah, it's a pathway to leadership, right? And talk to me about some of the mechanisms. I know that the DIFC Academy and now University of Birmingham have partnered with the CMT. How do you envision that to be sort of an engine for future growth?
Yeah, absolutely. The partnership with the IFC Academy, I think, is a huge success for the association, because this is where you can reach out to thousands of professionals who are already in the sector, and they can get involved in technical analysis. They've got a lot to contribute. They are already in the financial markets, but they can add the technical analysis layer and have even more tools at their disposal and become more able to contribute in their own disciplines wherever they are. For the University of Birmingham, Dubai, it's the perfect, I think, partnership, because we're reaching out to the younger generation, right? You wanna give them the a vision of what they can achieve. Like you can start with finance or whatever it is. You can get into technical analysis. You can build your own career. You've got these different routes to take, and at some point, you're trying to, in a way, produce a pipeline of future investors, future traders, future portfolio managers they're going to come from this region,
Yep.
because these are kids who are studying in Dubai. from
That's
all
all
over
they
the
do.
world. So
And
yeah,
study. Yes.
so if they work in Dubai, then perfect. If they go back home and they work from wherever country they come with, then they've got that uh, a university degree plus the technical analysis skills, which can open doors for them and open opportunities for them to chart their own course.
Yeah. Yeah, and it's ever more timely when you're young, right? You have all the time to devote to education and studies and building your network. Starting early matters
Absolutely.
a lot, you know?
Yeah.
Yeah, and I think this is
And
great. I think the spirit of mentorship is strong. Folks can always reach out to myself or Yara directly to learn more about the CMT Association, Women in TA, and of course the conferences coming up. Any last words, Yara?
yeah, I want to thank you so much for the opportunity. I enjoyed our conversation, and I'm a big fan of your work and your podcast. So
Thank
it's
you.
an absolute pleasure for me to be with you. I'm sure you'll continue to produce great value and achieve even greater success. So thanks again.
Thank you so much. Appreciate it. And just to wrap up, we have the September 28th conference in Riyadh. That's our chapter meeting. And then on September 30th through October 2nd is the CMT Global Investment Summit in Dubai. I'll have links to both of those conferences in the show notes. And that's all for now. Thank you so much for joining. Take care.